This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
What's up, everybody? Welcome back. Another episode of Real Estate Investing 365. Today I got with me Ryan Buldoc here. He's from southern Maine out there. He says it's actually getting kind of warm. I didn't know it got warm in Maine, but I guess it does.
We had at least a week or two of summer.
A week or two of summer and right into the snowy time. So Ryan, what's up, man? Thanks for being here. Appreciate it.
Yeah, thanks for having me. It's finally good to connect. We've both been pretty busy over these last couple months and everything going on. So it's good to finally do this.
Yeah, it's funny. If any of you out there are going to start your own podcast, you schedule things and then you get busy and they get busy, and it's almost like we've known each other for 6-8 months now, but this is the first time we got on the interview.
Yeah.
So
yeah,
it's good
really.
to finally be here.
Yeah, exactly.
So Ryan, why don't you, we'll just dive in and kind of tell everybody who you are, what you're about, how you got into real estate, and then we'll just go off on all of our stories from there.
All right, great. Yeah, like I said, I live in southern Maine now. I've kind of grown up in Maine my entire life. I'm from a central Maine area, a couple hours north of where I live now. I didn't actually get into real estate investing till about 2017. I was kind of newly divorced and was living kind of paycheck to paycheck in a sense, paying rent, and paying somebody else's mortgage. And then all of a sudden, I had started an engineering company. And one of my employees was like, you got to start listening to Bigger Pockets. And so that kind of got me on that kick. So then 2 months, I ended up buying a 4-unit and house hacked it. So, from there, I, going from paying like $1,300 a month in rent to now I was making money where I was living. To me, it was just like, the light bulb went off and I was like, I just got like a $30,000 raise by not even doing anything, you know what I mean? By just living in this house. It was a 4-unit. And then, within, say another, 10 months or so, I'd saved enough for a down payment combined with a couple other HELOCs from the first property and some 401k loans and things like that. So then I bought another property. I didn't even actually see it. I was in Florida. My realtor went and looked at it. So that was another 4-unit in the local area. And then within another, now in 2019, probably about halfway through 2019, I ended up buying another 3-unit next door to my first 4-unit. And I did that again with HELOC from the second property, and then another bunch of equity from the first one as well. So then I had, kind of 3 properties going, total of 11 units. But this last one I had to rehab pretty bad. So that was pretty stressful and almost kind of got me out of investing in real estate after dealing with contractors for about 5 months when I thought it was going to be a 2-month job.
Mm-hmm.
But then, I kind of got out of that and started, you get the itch again after a little bit of a while. And then I started thinking, I'm like, well, I've been saving up, my area, 4-unit, 3-unit, they're, 400,000 or so. That's quite a bit for a down payment. You know what I mean? You got to come up with 25%. So I'm like, God, come up with all this money or all these HELOCs, and you're trying to pay those off. And it's like, you can't really, I'm like, how do people scale? You know what I mean? How do you even do that? It's like, I like this. This is a good model. 1 a year is great. But then I'm kind of broke after I did it. You know what I mean? So I said, well, maybe I'll try a different market and start trying to buy some stuff cash or something like that with, smaller payments, and then try to do that BRRRR model that everybody's always talking about.
Sure.
So I kind of pivoted from there this year and went and did that. And now I've gone to a smaller market up, northern Maine area, further away from where I live. And, I've been able to buy 3 properties in 6 weeks or something like that. And they're all fixed up. One's already rented. The other two units will be rented in 3 weeks. So, I'm looking to get at least 10 more this year. That's the goal.
Wow.
By doing the BRRRR model instead of kind of save up, buy one, and then kind of try to save up again.
Right.
So, that's where I'm at right now.
Cool. So your first property was local to you there, but you said your second property was down in Florida. Is that what you said?
No, I was in Florida when I bought it.
Oh,
so I
okay.
didn't even see it. My realtor just walked through it and was like, "Oh, you got to buy this."
Yeah. Yeah.
And so I said, okay, put an offer in,
Okay.
and we ended up getting that one. But they were pretty competitive at the time. I think everything we bought, we paid well over asking to actually
Okay.
get the deals.
And have they appreciated since then? Like the market's still going up there?
Yeah. Yeah. I'd say I bought my first one for 350 and that's probably worth 450 now, 3 years later.
Okay.
Yeah, and the second one I bought for like 365 was saying it's probably worth 425 or 450 now
Okay.
in 2 years. So yeah, those ones have appreciation's been really good along with the cash flow.
Yeah, and it's kind of cool because you bought the next two after your first one with the HELOCs, right? From
Ye-
your, first one you got a HELOC, and the second one you got a HELOC. So it's kind of funny that you can, really as you're buying more properties, you can almost buy them with no money down as
Yeah,
you continue.
the first one I actually bought with a 401k loan. So I borrowed against my 401k for the down payment,
Uh-huh.
and it was I did an FHA because I could move in there. So it was
Hmm.
only 3.5% down. So I basically needed like 13 grand to buy a 4 unit. You know what I
Yeah.
mean? So I took a 401k loan. I ended up making money each month on that, and it paid it off itself. So literally, I had no money into that first deal. So that was the no money down one that I was able to completely do there.
Yeah, and the 401k loans are kind of cool too because you have to pay interest back on it, but you're paying yourself the interest. So I
Exactly.
always think, well, you know, hopefully if when you take the 401k loan, the market will drop right after you pull it out. That would be
Right.
good,
Yeah.
right?
Yeah. Exactly.
So
Or
anybody out there listening, maybe right now is a perfect time to pull out a 401k loan because who knows what's going to happen in the next 6 months or so.
exactly. Yeah, and then you just pay yourself back over time, and there's no penalties or anything like that. So
Yeah.
and I got an infinite return on that first one, so I wasn't going to get that in the market. You know what I mean?
Right. Oh yeah.
I so you can't beat that.
Yeah, no, that's cool. Okay, so real quick, let's talk about your first property. You decided your coworker said, "Hey, why don't you get on this bigger pockets, check it out?" And you get in there, and you're like, "Wow, this is amazing!" Right? Like everybody kind of jumps in; they're first excited about it.
Yeah,
Um, why did you decide to go to a 4 unit and not just a single family? What was kind of the thought process behind that?
money. You know what I mean? Like
Money.
just the returns and stuff. I kind of looked at a couple 2 units.
Uh
You know,
huh.
I from the time I started listening to that, I came up with my own spreadsheets and just started running numbers on. I still do it. Anything that comes on the MLS, I immediately throw it into a spreadsheet.
Uh
Or
huh.
to the point now, I can just kind of look at them and run through my own spreadsheet in my head. But back then, I was just running numbers, and I'm like, these 2 units in our area don't make sense. Single families, you're looking at an average home price of 350, 400, with a rent 1,500 to 1,800. You know what I mean? So that
Yeah.
didn't make sense to me. Um, and then so I could buy this 4 unit, and I figured with the calculations, even at the rents they were at, I could buy it for over 400 and still be, in that 1% rule,
Mm-hmm.
with a 4 unit. And then, my realtor kind of was like, too, like, oh, you could go to the 4 unit, then drop down to a 3, move into a 2, and then finally move into a 1, like living wise.
Mm-hmm.
That's not what I ended up doing, but that was kind of the thought process in doing it.
Okay, so you end up living in one of the units. You bought it as like
A
that's
house hack.
Yeah, house hack. That's great. That's what I tell everybody to do. And if I could do it over again, I mean, that's exactly what I would do. Because when I first bought my first house, it was in the Bay Area in California. Even though it was in the middle of a recession, I was young. I didn't have any money, and kind of like you, I didn't have a 401k, but I sold my truck and sold my dirt bike
Hmm.
in order to get the down
Yeah.
payment, and that's literally all I could afford. But I tell everybody, hey, like buy a 4 unit, and especially if you got a VA loan or FHA that you can use. It's definitely well worth it.
Yeah, I'm brainwashing my sons, and they're already. My first house is gonna be a 4 unit. You know what I mean?
Yeah,
They're like, but
perfect.
I'm not living on the bottom floor, so I hear everybody like we did. It's like I'm
Yeah,
gonna live on the top floor, so I don't have to hear anybody. But yeah,
right.
they're completely bought into the real estate thing too, because they've just seen how it's kind of transformed things for us.
Yeah, that's
And then,
awesome.
yeah, my
S-
first house was during the recession as well too. I bought in my out of school house in '07, and then
oh,
immediately lost about 50 grand in value. You know what I
right.
mean? In '08, and I didn't sell that till 2017, and still lost money on it. You know what I mean?
Oh,
So
yeah,
it wasn't like all of a sudden real estate was great for me. You know what I
right.
mean? My initial introduction was I lost a ton of money on my first purchase.
Right.
That was my primary residence.
And unfortunately, a lot of people, that's what, some people that happens to them and they'll never like get back on the ball, they kind of just like lose out. And it's kind of that way with everything in life. You got to keep on struggling, whether you're starting a business or fitness wise or whatever. It's probably going to suck for the first, who knows, it could be first couple of years, but if you have the drive to do it, just keep on sticking through, and making it happen. So on that first property is a 4-unit. How much did you say you bought it for?
I read around 350 something. I think it was listed for like 339. We ended up like for 350, 355.
Okay. And then what were the rents on that property?
At the time, they were getting about $4,000 total. There was, 2 3-bedrooms and 2 1-bedrooms.
Okay.
So I moved into the biggest one in it, a 3-bedroom, and kind of renovated it.
Okay. So you're getting like $3,000 a month from rent, and then you lived in one. So $3,000 a month. I mean, on a $350,000 property, your mortgage is probably only about $2,000 a month, or
2,300 with PI, TI, principal, interest, taxes, and insurance was 2,300.
Sweet. So you're getting paid $700 a month to live in this property. It's
Yep.
pretty awesome.
after paying $1,300 a month out of pocket, you know what I mean?
Right.
So you think it's like a $2,000 swing
Mm-hmm.
after tax.
Yeah.
So if you figured you were making that money, that would be like $2,500 a month that you'd have to make to get that much money back.
Mm-hmm.
So that's like a $30,000 raise by putting no money down. So it was a no-brainer.
Yeah, and then on top of that, you get to, you get to write off the depreciation of the property. You get the other write-offs of like maintenance and expenses, and then you get the appreciation as well. So, like I just had this conversation the other day with people buying more stocks and mutual funds and stuff. I'm like, that's fine, except for one, you don't have any write-offs along the way. Two, you might have appreciation in the stock price, but then when you draw on it, you're gonna have to pay regular ordinary income tax on that, instead
Exactly.
of like long-term. I mean, I'm not an expert in stocks, but that's what I hear most of the time.
Yeah, I've taken all my money out of that and started putting it into real estate. The only, my FSA or my HSAs and my 401ks are the only thing I have in the market, and the rest of it's now in real estate.
Yeah, that's a smart move. And I just did the same thing last Tuesday. What is the date today? Today's like the 14th. So
yeah.
Maybe on like the 10th or something, I just pulled out the last of my Edward Jones. Sold it all. And then, so I just have some stocks left in my 401k and my company that I just left. But they just filed bankruptcy. So it's in a good spot to go up,
Yeah.
Hopefully. But yeah, I think that's a good move. So, all right. So you got this property. What was the numbers that you were trying to look for when you were trying to find this first property? Cause you seem to have it kind of figured out. That's why you didn't go for the single family. Did you have a specific set of numbers you were trying to shoot for?
Yeah, it was kind of like, if I had a down payment, I was looking at like 20% returns, cash on cash is kind of what I was trying to find, and looking at properties. I figured, the average stock market return over 40 years is like 11% or whatever they say. So I wanted at least, kind of double that for when I started looking at deals. And then I knew once I moved out of this one that, I would be able to get at least that, even though it didn't really have any money into it. So I just wanted the highest cash flow, basically is what I was looking at. And I knew that from researching, because I'll go on Craigslist too all the time, like kind of daily or weekly, and kind of look at, all right, 3-bedroom in my area, 3-bedroom in this area, 2-bedroom in this area. What are people getting for rents? Yeah. And I kind of compare that, and I see things going up over time. And then I'm looking at the rents that, when I buy these things back in 2017, I'm like, they're 400 under market, they're 500 under market. And since then the rents on that one have gone up over $1,000 a month, total. Sweet. Yeah. So in 3 years.
It's cash flowing pretty good.
Yeah. That one. Yeah. It's got a special place in my heart, I guess, that one, the first one. That one's doing pretty well.
Okay. So you found this one with the realtor, right?
Yep. I got the MLS and I was just searching through stuff every day.
And it's funny, in 2017, a lot of people still thought, oh, the market's overheated, it's going to go down anytime. Let me wait and wait for a crash. Well, they're still waiting.
Yeah, I know. And it's even hotter now than it ever was. And in our area.
And it's hard to tell like what's going to happen, but at the same time, it didn't really matter at that time if the market crashed afterwards because you're cash flowing in your rent. So rents usually don't go down that much. They might go down, 5% or something, but as long as you put a buffer in there in your rents, you can still cover your mortgage. It doesn't really matter if your house or your property goes to a $0 value the next day, as long as you're still cash flowing if you're in it for the long term.
Right. If you're buy and hold, then you don't care what the market's doing. You know what I mean? And that's why when I bought that first property, that was, predatory lending, basically, 80-20, no down payment, all interest, balloon payment after 5 years or something like that.
Right.
Back in those days, there was no way I could win, essentially.
Mm-hmm.
Now it's like, if I'm buying and holding investment properties, like you said, you don't care if the market could go to zero and you're still going to get, make your money. And if I got 50% of the rents, that covers basically the mortgages, insurance, and taxes.
Mm-hmm. Yeah, totally. Okay. So on that first property, was there anything that happened or something that you do different now that you realize, hindsight?
Yeah, I would have, when you don't have much money, it was just, I had a very huge project going on at work. So plus I kind of didn't realize I actually had to move in right away. I thought I could just buy it with the 3.5% down. They're like, no, you got to move in. So then I had to kind of change that whole pivot. And, then it was like just the late nights and, trying to get everything done and moved. And I would have given myself more time and not taken on so much sometimes. That's, it's kind of something I do often, is take on a little too much. You know what I mean? I was extremely stressed out during that time, but, all in all, it ended up working out pretty well. So again, just not taking on so much in such a short period of time is just how I would have done it.
Sure.
And maybe hired a professional person to do it. I hired, some, friends or whatever to just go do work. And it took a lot longer so I actually had to go there and do some of the work myself.
Right. And then you're busy at work and everything. So it kind of just puts extra stress on you. But at the same time, it's probably good you did it, because if you thought about that ahead of time, then you might not have made the deal happen or something like that.
Yeah, yeah, exactly. So hindsight.
Yeah, definitely. Can you explain to people real quick, if somebody doesn't know, like, why did you have to move into it right away? Why can't you just like pay the 3.5% down and keep renting it out?
Because it's part of the whole Federal Housing Association, the FHA loan. You can buy pretty much anybody can buy a primary residence property for 3.5% down nowadays, except you have to actually be your primary residence. And it's fortunate enough they'll do it from a 1 to a 4 unit, because up to 4 units is considered, residential. And then once you get 5 units and above, that's considered commercial property. So you literally can get into a 4 unit, and if you were single with no kids or something, you could live in one of the units plus rent out bedrooms and then rent out the other 3 bedrooms and still get in there for oftentimes less than first, last, and a security deposit.
Yeah.
So it's kind of a no-brainer. Things have changed a bit with it. Previously, like before 2008 and everything like that, you could actually get the PMI off of your loan once you got down to 80% LTV. But nowadays with the FHA, the PMI and cost is there for the life of the loan. So that's something different that's happened since the 2008 crash or whatever.
Okay. So, but then what people can do with that is they can just refinance out if their property appreciates, or they've paid it down enough that it qualifies for a refinance, right?
Yeah, exactly. So the thought was to kind of do that 1 year, because you're only allowed one FHA loan out at a time. Do it for a year or so, refinance it into a conventional, and then go do another FHA the next year, because you wouldn't have an FHA loan. I don't know how it works with a VA, if you can do an FHA, then a VA, and have both open. I'm not sure about that.
Yeah, I'm not sure. I think you can actually.
So that's just
one
huge
VA
benefit.
at a time. Yeah.
Yeah, that's a huge benefit.
Okay. Right on. So after that, you went into, you bought the next couple properties, multifamily properties there where you were living, but you realized it was kind of getting too expensive and saving up the down payment is just kind of an issue. So you decided to move up to northern Maine. Is that right?
Yep. Just a couple hours north of where I live, where it's the average house price is $100,000 versus $350,000.
Right. Yeah, and that's what Brandon Turner over there on Bigger Pockets, they kind of talk about a lot is like, listen, just about anywhere you live, like within a few hours of your house, there's always like a market that's um, significantly cheaper if you live in an expensive market. I know that's the case in California where I came from. Within a few hours, you can still find reasonable priced. It's still kind of overpriced, but much cheaper than the Bay Area or whatever.
Yeah.
So, how did you end up deciding on that place? Did you go to that place a lot, or you just knew of it from the past?
Yeah, that's where I grew up, kind of in that area. And I've also, again, just kind of combing through MLS and like I said, Craigslist. I was like, I wonder what a 3-bedroom rents for in this area or in
Mm-hmm.
this area. I just kind of do that. And I was seeing some of the rents and my mind was like, like that's not much further off than, what I'm getting down here or things like that. But I know the end point of entry is, quite a bit smaller.
Right.
So
Okay. So you decided to do the Burr method up there, right? You, like find the properties. Explain what the Burr method is if anybody doesn't know, which I'm sure they do. But
yeah, see if I can get it right. You know what I mean?
yeah.
So you actually end up buying the property, right? And then you end up renovating, you end up renting it out, refinance all, if not most of your money back out of it. And then you try to repeat it. So it's basically like you just keep getting your money recycled. So you can basically you put it out for a little bit, and
Mhm.
then you get it back and you can do it again. Your cash flow will go down a bit because you're going to leverage it. But you have that money back in your hand to do it again, hopefully within a few months. So I just closed on 3 properties, I think I don't even know what month this is, July. So one's rented, 2 more will be rented in a couple of weeks, I was saying. And hopefully once that happens, then I'm going to try to refinance those back out, and then get my
Mhm.
money and try to do it again. So,
Okay. So these 3 that you just closed on, did you have to renovate them?
so far, yeah, 2 of them I'm going to do some renovations on. One of them I bought and then it was rented the day I bought it. The first one I bought was a single family and now I'm converting it into a duplex. So it
Mm-hmm.
was sitting on the market forever. And then all of a sudden I got a hold of a realtor and she's like, well, this one's over here. Let's go take a look. So we went over and looked at it and we're like, this could easily be a 2 unit. And the paint job in there cost him $30,000. I mean, it
Inside the
was
house?
inside the house. I mean, it looked like something out of like a crazy 70s movie or something like that. And literally, the guys basically had painted and putting floors in it, and it's probably going to be worth, 2.5 times what I bought it for, or something like that.
So he had
We'll
these
see. We'll see
really,
how the appraisals go. But
yeah. So he had a really unique paint job in the house, which just probably scares a lot of people away. But if you're not afraid of those little, a little bit of work or just hire it out, it's like not really that big a deal. It's not structural or, moving walls and all that stuff.
yeah, that's what I look for. You know what I mean? Like it was
Mm-hmm.
perfectly. It was structural. They had new windows in. They had put vinyl siding on. They'd updated the electrical. They had updated some plumbing, but they just didn't make it look inhabitable. Like the floors were not very good,
Mm-hmm.
and you throw in some laminate floors and some paint, it transforms a space.
Yeah.
So it's amazing what that does. I mean, that's a half of, if you can find rehabs like that, those are the ones you want to get into. Paint and flooring,
Mm-hmm.
they make a huge difference.
Yeah, and you don't even have to do it. Just make it like look decent for maybe another investor if that's what if you're gonna just sell the property,
Mm-hmm.
or if you're just gonna rent it out. I mean, if you're like in a C plus rental area, well, it doesn't have to be granite countertops and you
Exactly.
know undermount sinks and all that stuff. But okay, so these 3 properties, were all 3 of these end up on the MLS?
Um, 2 of them were on the MLS, and like I said, this one was on there forever because it was a single family and no one wanted it. So I
Mm-hmm.
bought it and turned it into a 2 unit. The second one was a MLS, and the last one we got was a Zillow for sale by owner. So my realtor actually drove by it,
Mm-hmm.
took a picture of the sign. She's like, "Call this guy," and I called him. And I was the first one to see it, and he
Uh-huh.
took my offer right then.
Oh,
So
sweet.
I got it. That was a really good deal as well. So that one worked out pretty good so far.
Yeah. So did you already have the realtor up there, or how did you find a good agent to work with?
So like when I just decided to, go on a particular market, before the whole Corona thing hit, I was, I was on the phone. I'm on the road for work a lot. So when I'm driving or in an airport, something like that, I was reaching out to different investors I knew, and then got recommendations on property managers, got recommendations on realtors, and then just kind of started reaching out to those people and letting them know what my plan was, and setting things up like that. And then right before it hit again, I was like, all right, I'm going to do this. So I went and refinanced all of my properties and then took HELOCs out on them as well. So that's the money I'm basically using to do these BRRRRs now. It's again, equity from the previous rentals that, it's a HELOC at one's 2%, one's 4%. You know what I mean? That put the money out, a couple months later, put it back in, and then start acquiring assets. So I kind of did the groundwork for a month, a couple months beforehand. And then once I decided to go, it was just started hitting it hard with the realtor and the property manager.
Okay. So what kind of loans did you get on these properties?
As of now, I haven't refinanced them yet because I haven't rented them out yet. So right now
cash for them?
They're all cash right now.
Okay. So you bought 3 properties and you just paid cash for them. And then that's your plan, is to take an actual loan out on the property. So it's not really a refinance. It's just like you're going to finance the properties.
Exactly. Yeah. So I could buy them with cash. Like I said, it's from my HELOCs. But then after a month or two, I found banks that have no seasoning required. They'll just do a cash out refi based on the property once it's rented and fully rehabbed. So I'm thinking September-ish, I'm going to start putting together the mortgage with a cash out to do that on all 3.
Okay, so why don't we talk about that for a second? Is how did you find banks to do that? Are they small local banks, credit unions? Like, did it take a while? How did you find those?
I've actually just been calling, local banks again, people that I've worked with before. And I've 3 or 4 local banks were like, oh, that's a great model. They're like, that's great, because most people call them, and, especially in smaller areas, and they want the money to rehab it as well. You know what I mean? They're like, you just want a mortgage on it when it's already been fixed and we don't have to put any money in? I'm like, yeah. Like, oh, absolutely. We'd love to do that. That's a great model. And one bank was like, we'll do it, but I think we'll only go up to like 40 million or something. And I'm like, well, okay, I'm probably at 200 grand right now, but
no, you're just like, well, I think I only need 35 million. So
yeah, that's right. Yeah. Well, it's only going to get me a year or two.
Yeah. That's fine.
So 3 or 4 local banks that I've called, they've been on board.
Okay. So did you just for somebody that's out there looking for maybe these local banks, did you just literally call the bank, or did you go in there and say, hey, I want to talk to a loan specialist or a loan officer?
Well, it's been COVID, so you can't go anywhere.
So
so literally just emailing, calling, finding out, hey, can I talk to your commercial loan department, things like that.
Why the commercial loan department as opposed to the regular?
Well, with this particular, this new venture, I started getting back in when I started doing the HELOCs as well. I started getting private money lined up to do that if I didn't, instead of before the HELOCs. So that way I could have more capital to invest. I started saying, hey, would you loan me X amount of dollars at this interest rate in 6 to 12 month terms? To my shock, I got the first 2 people I asked ponied up quite a bit of money. And I'm like, wow, that was easier than I thought. You know what I mean? People are like, oh, I use private money. And I was kind of nervous about something like that. I'm like, who's going to loan me money?
Yeah.
And then everybody I talked to is like, oh yeah, I'll do that. And I'm like, oh, okay, cool. So then I started talking about the deals with one of my friends, and we used to work together, and he was going to loan the money. And then all of a sudden he started getting all jacked up and excited. And he's like, well, can I do it with you? And we're complete opposite as far as personality traits. You know what I mean? Like, I'm the kind of off the wall bit, just kind of like the big ideas, finding the deals, doing all that stuff. He is a methodical person. Everything's got to be dotted. Everything's got to be crossed, but we both want the same end. So it's kind of like a perfect partnership. So we partnered on these ones up north, and we created an LLC. So now, in order to get financing through the LLC, it has to be a commercial loan.
Mm-hmm.
So we're looking at doing that, and I bounced it off and back and forth of buying one in our name and then transferring it into the LLC. So I'm still kind of battling that one of
Yeah.
what to do with that. But my goal was kind of combine them all together. So I'd have one, one closing cost, one signing and things like that. So doing a portfolio loan, it seemed, I still could be swayed to do it the other way, I guess,
Well, you probably are most likely you would end up having to do like a portfolio loan on their commercial side anyways, because just because the way you're structuring the deal, like taking the cash out afterwards, they'll probably want to hold that on their own books,
Yeah, right. And the rates aren't going to be as great, and but it'll be cleaner for the LLC, for the company, as far as it just doing it that way. Because we plan to scale quite a bit together over this next 2 years probably.
Okay. All right, cool. Yeah. So that's kind of my next question is like, what's your guys' plans for the future? Where are you heading? You going to stick on the BRRRR method with single families, or are you going to try to move into something else? What's the plan?
Yeah, we're going to continue to do the BRRRR. I'd like to do, anywhere from 10 to 20 of them, or a large number of units, just over the next, 12 months or so. Our goal is to kind of just stack it from there, start in this smaller entry point, 100K properties and less, and then slowly move, like prove the model and prove it. Like, okay, now we have a project profile that we can show to people, and then say, all right, we've gotten this pretty good. Let's go to maybe the market I'm in where I live now, where it's, the entry point is 3 times what it is there, and then possibly, start moving more south towards Boston, eventually just keep getting bigger and bigger deals, but kind of trying to do the same method.
Yeah. Are you going to plan to find them just off the MLS, or are you going to try to do some off market deals?
No, I cold call people too.
Okay.
I'll drive by, I'll see a for rent sign, give the guys a call, say, hey, I'm not looking to rent, but are you interested in selling?
Yeah.
So I've got a few people that are interested, but they're like, I'm probably 2 years out. So then I just set a reminder on my phone to call them every 2 months, just in case, and kind of check in. Hey, anything happened? You want to sell yet? Things like that, and at least just touch base with them. We've also thought about starting a mailing campaign type of thing. Talked to a few people on Instagram about it that have had some success. So we'll see if we start doing that. We're both pretty busy with our day jobs. So there's not a lot of time during the day. So it's all, all at night or when we can fit it in.
Is the plan to move away from your day job or your other business and kind of do this full time, or?
Yeah. I mean, eventually, I would like that. It can be a grind, the projects, outages, things like that, on-site work is a lot of stuff that we do for, substations, power plants. So we kind of get guys all over the country at different times, and I've had to do it many times as well. So it wouldn't be bad to be able to just kind of, look at properties and things like that. And then analyze deals and get it into the funnel. I mean, that wouldn't be I would definitely say, we're trying to push towards that eventually at some point in the future.
Okay, right on. Well, what do you think is going to happen? I know nobody has a crystal ball, but what do you kind of anticipate with the whole COVID thing or the next, 12 months in the real estate market?
What I'm seeing, I don't know how your market is, but up here, it's almost hotter than it's ever been.
Yeah.
Like in the area that I went up in north, they've never had like price wars, or they've never had escalating prices and things. And everybody I'm talking to that is trying to buy a single family to live in, they're like, I offered 25 over asking and we didn't get it. And I'm like, in $100,000 ranges, not like, not like a $400,000 property. So they're offering like 20% over and not getting it. It's a lot of people from, I live like 75 miles north of Boston, and, the Boston, Connecticut, New York, a lot of people like that are looking at homes up here to have with, there's a, another lockdown, things like that. where there's a ton of space and, green areas. They're buying stuff sight unseen cash up here. So I was kind of thinking that it might, if things happen, there was a dip, it might be, vacation properties might be cheaper and things like that, but those are getting scooped up here too. So I thought it would be the opposite right now. I thought things would
cool down a little bit.
Right. So, but within 12 months, who's to say? I mean, how much stimulus can we produce? You know what I mean?
Yeah.
So that's why I'm doing the burr. That was my thought coming into this year. I was like, this can't keep going. I want to have a stack of cash lined up when and if something happens. But if I kept buying properties and putting all my money in the down payment and then having nothing afterward, I wouldn't be in the opportunity as well to buy them. But if I'm doing the burr, putting the money in, now I'm getting it out. Now I have an asset with equity. Putting the money in, getting it back out, asset with equity, and the cash flows, building that stack a little bit more. Now in 12 or 18 months, I have all the money I would have invested into, a 4-unit down here or something like that, as well as equity and cash flowing assets that I picked up along the way, so that I can act a little quicker and, more decisive if something does happen.
Yeah, no, and I've seen the same exact thing, where we just moved from in Northern California, was up in the mountains, super small town, it's always been kind of a tourist area. And I almost have a little regret because we sold our house and we put it on right before COVID. And, I got scared because we weren't getting any view, any showings. And we just, we were planning on, already had a date to move up here. So I needed to sell. So I just slashed the price almost $100,000, during the COVID. Well, as soon as it opened up, literally we got a freaking offer. And then now the average days on market in the place we just came from is only 5 days on the market, and everything's over asking. And I'm like, dude, I feel like I just gave our house away, but I mean, I still made some money, but not nearly as much. But I didn't want to get caught in it because I wasn't anticipating that to happen. So I feel like with, maybe the big city metro areas are going to have a price correction. But the outlying areas, vacation areers, or even tertiary markets or something like here in Boise is just going to keep going up because people don't want to be in those coastal cities or, with all the restrictions and super dense populations and all that with the fear of the old corona. So yeah, it's crazy. It's just strange times, I know.
I thought I was going to be able to buy a ton at this point in time, but it's quite a hot market. The second one I got this year, we were able to get it right away. It was out-of-state investors that owned it for 20 years. We got it way under asking, but other than that, it's the ones that people didn't want that we ended up getting. I'm supposed to be looking, my property managers and realtors supposed to be looking at an 11-unit tomorrow morning. And they said they don't expect that to last the day, in the area. And then there's an auction I'm going to look at next week, and I guess so is about 100 other people. But so it is getting a little competitive.
It is, but I've heard some people say, it doesn't really, just buy the property because especially if inflation kicks in real hard or something, or what do they call it? I'm not an economist, but stagflation, right? Where the prices are going up and wages are going down at the same time. Well, then the property value is just going to go up, over time drastically. So,
right. Your payments stay the same and rents keep coming in, during the deflationary periods or things like that.
Yeah. So anyways, okay. Well, cool. Ryan, that's a good story. I wish you the best. Where can people find out more about you or maybe connect with you if they have any questions, anything like that?
Probably where I'm at the most would be, I guess, on Instagram, and that's at Maine Multifamily. So it's Maine with an E, MAINE, not at the beginning, but Maine Multifamily. That's where I am the most, kind of do stuff about real estate there. Met a lot of good people on there. It's pretty cool to find people just, sharing stories on there and seeing everyone's progress. It's pretty neat.
Yeah, for sure. Okay. Right on. Well, all that'll be in the show notes. Ryan, thanks for the interview. That's exciting. And I'll have you back on in a year or so. And after you have, that $40 million limit.
Yeah, that's right. Yeah, exactly. Yeah. Can't wait.
Yeah. So right on, man. Well, have a great afternoon and I'll talk to you soon.
All right. Great. Thanks.
Thanks.